Jerome Powell's tenure as Federal Reserve Chair is approaching its end, and all eyes are on President Donald Trump as he prepares to select Powell's successor, a decision with the power to reshape not just the American economy, but the entire landscape of the cryptocurrency market. The fate of your crypto portfolio could hang in the balance, with Bitcoin's next destination potentially as high as $200,000 or plunging below $80,000, all depending on the policy course charted by the next Fed chair. In the corridors of Washington, D.C., 4 names are circulating, each carrying their own vision for monetary policy, inflation, and the digital asset space. Understanding who these candidates are and what each could mean for the next bull run or the next bear market is absolutely critical for any investor navigating the volatile waters of crypto. Let's start with the basics. Why does the Federal Reserve Chair matter so much to digital assets, and how does their decision-making ripple through the markets you care about? The Fed Chair is far more than a background figure issuing dry statements on the state of the economy. They are the architect of American monetary policy, wielding enormous influence over interest rates, the supply of money, and the relative strength of the dollar. These levers don't just impact traditional markets. They set the tempo for Bitcoin's price action, altcoin cycles, and even global risk sentiment. When the Fed raises interest rates, borrowing becomes more expensive, liquidity dries up, and risk assets like crypto often suffer. When the Fed cuts rates or injects liquidity, speculative assets tend to soar. The chair's posture, whether hawkish and focused on fighting inflation, or dovish and willing to tolerate price rises to support growth, can tilt the entire macro environment. That's why every word from the Federal Reserve podium and every shift in policy is watched, dissected, and priced in by traders across the globe. If you think that a monthly Consumer Price Index, CPI report, moves the market, realize that the Fed Chair's outlook can set the direction for months or even years to come. Now let's introduce the first major contender, Christopher Waller. Sometimes referred to by insiders as the Shadow Chair, Waller is already a member of the Federal Reserve Board of Governors, having been appointed by Trump during his first term. He is seen as deeply trusted by the Trump team, which gives him a strong shot at the top job. What sets Waller apart is his pragmatic, data-driven approach to monetary policy. He has signaled a willingness to cut rates if economic conditions justify it, even if inflation hasn't fully returned to target. Waller's philosophy is clear. Temporary inflation can be acceptable if it supports broader economic growth. Critically, for the crypto community, Waller has recently voiced a forward-thinking stance on digital assets, particularly stablecoins. He has publicly stated that stablecoins could enhance competition in the payments system and lower transactional costs for both consumers and businesses. Waller recognizes crypto as a legitimate piece of the future financial system, not just a speculative curiosity. If he takes the helm, expect policies that are more open to innovation and more accommodating to digital assets. Under Waller's stewardship, Bitcoin and other cryptocurrencies could benefit from a supportive regulatory and liquidity environment. If you're betting on a bull run, Waller's appointment could be the green light you've been waiting for. But not all the names on Trump's shortlist are as friendly to risk assets. Enter Kevin Warsh, a figure with a reputation that precedes him, known in some circles as the Hawk of Wall Street. Warsh served as a Fed governor from 2006 to 2011 and built his brand on advocating for strict, rules-based monetary policy. He is deeply skeptical of the Fed's recent accommodative stance and has called for a strategic reset to restore the central bank's credibility. Warsh's approach is focused on beating back inflation, even if it means sacrificing short-term growth. If Warsh is selected, prepare for a much stronger dollar, delayed or minimal rate cuts, and tighter liquidity across the board. For crypto, this environment is often toxic. Bitcoin tends to struggle when the dollar rallies and excess capital is drained from speculative assets. Warsh's hawkishness could usher in a new crypto winter, with prices stagnating or falling as traders flee to safer harbors. What's especially important is that few market participants currently expect Warsh to get the nod. If Trump surprises with this pick, the shock to risk assets could be immediate and severe, catching many off guard and triggering substantial volatility. Next, we turn to Scott Bessent, a true wild card in this race. Bessent is not your typical central banker. He's a seasoned veteran of the hedge fund world, having served as chief investment officer at Soros Fund Management and currently playing a significant role in Trump's economic team as Treasury Secretary. Bessent's background gives him a sophisticated understanding of global financial markets and the interplay of monetary policy, capital flows, and risk appetite. Where Bessent stands out is his advocacy for aggressive rate cuts to jumpstart economic growth. He's a firm believer in using monetary tools to stimulate the economy, especially in times of uncertainty or stagnation. With his finger on the pulse of both Wall Street and Washington, Bessent's appointment could signal a decisive shift towards a more dovish, pro-growth Fed. For crypto enthusiasts, this is a tantalizing prospect. Looser monetary policy tends to favor risk assets, and Bessent's approach could open the floodgates for another parabolic run. It's not unrealistic to imagine Bitcoin challenging $150,000 or even higher under a Bessent regime, especially if his policies ignite another round of speculative fervor. Our fourth major contender is Kevin Hassett, an economist with a different pedigree. Hassett has been a leading voice in Trump's economic inner circle, having chaired the Council of Economic Advisors during the previous administration. He is widely seen as pro-spending, pro-stimulus, and a champion of policies designed to make growth great again. Hassett's academic background and policy experience give him a unique perspective, blending theoretical insight with practical application. But there's a catch. Unlike the other candidates, Hassett has never worked inside the Federal Reserve System. This lack of hands-on monetary policy experience raises questions about how he would handle the immense pressures and complexities of running the world's most important central bank. Markets might initially respond positively to his big spending tendencies, expecting more liquidity, looser policy, and a friendlier environment for risk assets like crypto. However, if Hassett missteps or loses the confidence of investors by moving too aggressively or misreading economic signals, volatility could spike and uncertainty could reign. The market's reaction to Hassett could be a roller coaster, potentially very bullish, but with a higher risk of policy error or miscalculation. As with any Trump administration, there's always room for surprises. Two additional names have surfaced as possible contenders, each bringing their own unique flavor to the race. David Malpass, the former president of the World Bank, is known for his conservative economic views and his cautious approach to both fiscal and monetary policy. If selected, Malpass could signal a return to orthodox, measured central banking, which may not be as friendly to speculative assets. On the other hand, Michelle Bowman, already a Fed governor, could become the first woman appointed to the chair by Trump. While not as high profile as the others, both Malpass and Bowman carry the potential to surprise markets, injecting a new layer of unpredictability into the already volatile world of crypto. Let's distill what all this means for your crypto strategy. If you're bullish on digital assets, your best-case scenario is the appointment of Christopher Waller or Scott Bessent. Both are likely to favor policies that support liquidity, growth, and financial innovation, creating an environment in which Bitcoin and altcoins can thrive. Waller brings experience and credibility from within the Fed, while Bessent brings market savvy and a willingness to act decisively. On the flip side, Kevin Warsh represents the greatest risk to the ongoing bull run. His hawkish approach would prioritize fighting inflation, likely at the expense of risk assets. Under his leadership, expect a stronger dollar, tighter financial conditions, and a possible return to crypto winter. The market isn't currently prepared for a Warsh appointment, which heightens the risk of a negative surprise. Kevin Hassett sits somewhere in between. His policies could unleash a wave of stimulus and support for crypto, but his lack of Fed experience introduces a significant element of uncertainty. If he can win the market's confidence, the upside could be dramatic. If not, expect choppiness and potential misfires. Meanwhile, the wildcard candidates, Malpass and Bowman, could bring unexpected volatility simply because the market is not factoring them into current forecasts. In the world of crypto, surprise is often the catalyst for sharp, sudden moves both up and down. Ultimately, the choice of the next Federal Reserve Chair is about more than personalities or politics. It's about the direction of the world's largest economy and the environment in which digital assets must compete. The right appointment could extend the current bull run, sending Bitcoin and other cryptocurrencies to new all-time highs. The wrong pick, at least from a risk asset perspective, could slam the brakes on growth, drain liquidity, and send prices tumbling. This is not a moment to passively watch price charts or scan headlines. The selection of the next Fed chair is the single most important macro event for anyone invested in crypto over the next 2 years. The candidates have been identified. Their philosophies are clear. Now, it's about reading the signals and positioning yourself for whichever path the market takes. In times of uncertainty, information is your edge. Don't just track the price of Bitcoin, track the hands that hold the levers of power in Washington. Watch for policy statements, personnel rumors, and shifts in sentiment as Trump's decision approaches. The fate of your portfolio could be decided not by the latest meme coin or protocol upgrade, but by who is watching over the world's most powerful money printer. Stay tuned as we dive even deeper in the next episode, using historical data and macro models to simulate how Bitcoin could react under each potential Fed chair. Subscribe, stay alert, and don't let the next monetary shock catch you off guard. The future of crypto is being decided right now, and the smart money is already paying attention.